smartasset.com just did a study on the mortgage situation based on debt to mortgage ratio, and San Luis Obispo came in number 10. And we're talking about number 10 in cities all across the country that weigh in with, Honolulu, Hawaii, San Jose, Oakland, San Francisco, and then there we are at number 10. And so we wanted to get AJ Smith on the line. She's from smartasset.com to talk a little bit more about this, because when I first look at this, it's a little depressing. How are you, AJ?
I'm good, thanks.
Okay, so Smart Asset.
Yes.
What is the main goal of what you guys do? It says you're the Vice President of Financial Education, right?
I am, yes.
So what is Smart Asset? Is it a mortgage company, or is it, do you guys
We're
analyze
not.
data?
We're a financial technology company. We're a personal finance website, and we have tools and calculators on our site that help people with big personal finance decisions. So things like, how much house can I afford? Mortgage calculator, what will my monthly mortgage payments be if I get this mortgage? How much money do I need to save for retirement? Those types of questions. We have automated and free tools on our site, and we cover a wide variety of personal finance topics.
Well, I mean, buying a house is probably the biggest purchase, especially a first-time buyer, is ever going to make. And depending where you live, like I'm from the northwest part of Washington State, moving to California and, going from paying for, I don't know, maybe $250,000 to over $500,000 for a smaller house.
For a standard house.
Is a pretty big purchase. So it's nice to have, people like you out there to kind of assist us in doing that.
Well, that's what we hope to do. Hope to get people kind of more knowledgeable when they go to make these big decisions, so they can feel more confident with their decision, not that they're having to rely on someone else, like their mortgage broker or their real estate agent, to tell them that it's a good idea, but that they can feel like they're really evaluating and understand whether this decision makes sense for them and their family.
The local TV station here did a feature on how the middle class is leaving the area, and we're in San Luis Obispo, which came up 10th on your list for largest mortgage to income ratio. And the middle class is leaving because they can't afford to hang, which is a big problem for society as a whole, because if you have a community that has no middle class and you just have the haves and have-nots, it can create a lot of tension. Is it because the mortgage to income ratio is so high in San Luis Obispo, is that a deterrent for people not to buy?
We didn't look into those reasons or that trend with this particular study that we looked at. We really looked at what that mortgage to income ratio was, because a lot of the thinking is, well, yes, you're going to spend more for a home in California, but you're also going to make more. That's the common thinking, and that is often true. But the idea is, you can still be overextended. You can still have a higher mortgage that maybe makes sense for your family. And so we wanted to get people thinking about that. What is a reasonable mortgage to take on? And then you're right. It's up to kind of finding, is that even possible in the location that you are? And sometimes the answer is no. That's not really possible to do without making some big sacrifices in other areas of your financial life.
Processing the top, 20 cities, a lot of them are in desirable markets, what would be considered to be desirable markets. What were the bottom 20 markets on your study of mortgage to income ratio? Or don't give me all 20, but what were some examples of some of those markets?
What we saw when we did our analysis was that really the Midwest takes on the least debt. That's what we really saw. Metro areas where residents take on the least debt relative to their incomes tended to be located in the Midwest. Places like Illinois. Illinois had 4 of the metro areas in our bottom 10, and Indiana had 2 of them.
Okay. Did you ever watch, what's the show on HGTV with the couple? What's the name of that
Fixer
couple?
Upper.
Fixer Upper.
Yeah, they're in Texas.
In Waco,
Yeah.
She knows Chip and JoJo.
Where are you? Where do you live right now?
In New York City.
Okay, so you know about. Is it ever blow your mind when you watch that show and what those houses are going for?
Of course, I turn to my husband every time we're watching that show and say, "What are we doing?"
I know, right?
All of a sudden, I'm convinced that Waco, Texas, is going to have the nicest homes for the.
Everybody's going to be moving there.
Everybody's
going to be
it's
moving there.
The best thing for the economy of Waco is to have Chip and Joanna living there.
Probably the reason they are not doing the show anymore is because they have to remodel so many damn homes.
There's no other homes to do. They've done them all. now.
It's interesting because Jeff is actually going into buying a house right now.
I'm in this process.
My wife and I are continuing to rent because we think the market is really high, and it is higher than it has been. But we're just trying to figure out, like, is the market going to come down? We just don't know, right? I mean, trends, they're kind of like waves; they go up and down. But it's like, when is a good time to buy? And in our situation, we're thinking, well, gosh, if we went in to buy a house, and we're going to buy a house that's $500,000-$600,000 because that's almost what you have to buy. Jeff, I think, found a rare gem under $5,000, but then you're going to be house poor, and then it's like your whole life is pretty much gone, and everything is going to your mortgage. And is that worth it?
Well, I think that's what we see, and that's certainly what gets a lot of people into trouble is when it's quote unquote a good time to buy, and everyone thinks, oh, that means it's a good time to buy for me, and that's not necessarily the case. When rates are low, of course, that can mean you're going to be paying less money in interest, and that's an attractive feature. But it still doesn't mean that everyone should be buying a home at that time. It really is personal. That's why we call it personal finance. That's why we have our calculators that really help you see what it'll mean for your finances. You hear that your neighbor or you hear that your best friend or a relative got a great deal on a home and, is paying this very low interest, and you think, oh my gosh, I've got to get in on this right now, or I don't want to get in on this right now, that it's a bad time. But it's really important that people take a look at their own situation. What do their finances look like so they don't end up in that situation like you're talking about where, they're having to forego other financial priorities. They're not putting money away for retirement because they're putting all their money towards their monthly mortgage payment. We really try to encourage people to look at their own personal finances because that will really determine when it's the right time to buy.
Well, we appreciate the tools that you give to us that are unbiased tools over at Smart Asset. I mean, I'm sure you guys do a fair amount of advertising, but I mean that's on us to click on, right? Like you said earlier, when you deal with mortgage and real estate people and insurance people and all that, of course they're pitching it to you, so their best interests are in hand. And if you're doing the calculating on yourself and using some of these tools that are available at Smart Asset, then we appreciate that as the consuming public, I guess.
And even if people have your best interest at heart, even if they're not trying to be, the fact is that, yes, a mortgage broker, they know this language. They know the mortgage world, and you're probably going into it for your first, second, maybe third time. Mm-hmm. You're going in there kind of on uneven footing right from the beginning. So we hope that this helps people to feel a little bit more knowledgeable and a little bit more like they're on that even footing.
All right, AJ. Well, thanks for your time. SmartAsset.com is the website. Is there anything else people need to know to find out more about you guys?
No, come try out the tools. Hopefully start thinking about your own situation. If retirement or buying a home is in your goal list, on your bucket list, start thinking and planning now so you can make it a reality.
All right. Cheers. Have a great day.
You too. Bye-bye.
Did you say tears or cheers?
Cheers. I'm in tears.
Because sometimes it could be
That's
tears.
What happened.
It could definitely be tears. We were talking to AJ Smith there from Smart Asset. And I wonder we should have asked her this too, and it didn't even occur to me until after we were done. If they've ever ran any statistics on people that have bought their house, first-time home buyers, and then people that actually bought their house, because that's the American dream, right? The American dream is to be able to own your own home. And many times people try to achieve that American dream, and they just, for whatever reason, it does not work out.
What is owning your own home? Is it paying a mortgage, or is it actually paying off that house and now saying, this is my land, this is my house?
I think that's
no one can tell me what to do with it.
That's the ultimate goal, but by mortgage standards, that's a 30-year goal, which is a big chunk of your life. A huge chunk of your life. It is what it is. There's things around that. You could refi, you could sell, you can move up, and all that stuff. But at the end of the day, that's the American dream is buying your first house. But I wonder if there's anybody out there that owns a home that wishes they rented a home.
What, because they bought in and they
maybe they bought
over their heads or something?
Yeah. Maybe they're not handy around the house. Every time something goes wrong, they have to call somebody. And when they call somebody, it's a couple $1,000s every time, minimum, or $10,000 every time. But there's something to be said for people that get the opportunity to buy a house and fix the house and make it their own. Whereas when you're renting, you don't get to make it your own. You have to live by the standards of the landlord.
We've got a guy here that has some financial advice he wants to give us.
Okay.
Go ahead, man.
Good morning. Great show. Hey, about the 30-year fix, that's just a farce. There is a 15-year loan, and you can have your home paid for way in advance.
True, but then that is a mortgage payment that, like we were talking about mortgage to income ratio. I mean, you talk about we're already stretched thin. We're the 10th most stretched thin market in the United States, according to Smart Asset, right? So if you are to basically double up on those mortgage payments by taking a 15-year, then you really got to be making some serious scratch, right?
Can I add to that?
Sure, please do. I mean, I don't know much about it.
Dave Ramsey. The scenario goes this. If you had only living expenses, meaning a mortgage and electrical and water, and you had no bills, meaning you don't go buy a $30,000 vehicle, you don't go get yourself in debt with credit cards, you could pay off a 30-year loan in 15 years.
That's, you know,
Or less.
yeah, you have to be extremely disciplined.
Yeah. If you don't want to enjoy your life whatsoever for 15 years,
Yeah.
If you don't want to do
But then
anything
after that 15
for
years,
15 years,
But after that 15 years,
you could die in 5.
True.
You could get hit by a train.
So I mean, that's what
Okay,
I guess we're talking about here.
I mean, yeah, I understand that, and I know Dave Ramsey, and I've listened to his radio show, and I've read some of his stuff online, and it's all great. But, you know, for 15 years, you can't do anything. I can't live that way. I'm not that disciplined.
Okay, how about this?
And I want to enjoy my life.
Forget about the 15 years. You have a 30-year loan. If you have no debts, live your life by making a job and spending your money any way you want, whether it's paying off your loan quicker or traveling. So the main thing is, if all you have is living expenses, everything else is a plus.
No,
including your mortgage. That's all I'm saying.
I got you.
In theory, it's a great plan. It's a great plan, but what's the reality of that? It's not.
The reality is, don't get in debt.
I know, but yeah, easy to say.
Everybody is.
But most people, you know, the majority of Americans do have credit card debt, and a lot of them have sizable credit card debt.
Okay, let's back this up one more step. I'm tutoring an 18-year-old. I said, you want to know what it is to owe the man? It's not your job. It's you getting in debt with credit cards or whatever you want to buy that couch that's going to last a year to pay them off. No. You go and pay cash. Same thing for a home. If you're going to buy a home or are stuck in a home, you put your money away. You don't spend it. And if you ever want to go out to dinner or whatever, you're paying in cash, not credit.
Yeah, no, that's a good point.
Stay out of debt.
Yeah, thank you.
The point.
No, that's a great point. And, you know, kids today, everybody gives them a credit card when they turn 18, and they get into a lot of trouble. And I know that my wife got into that a little bit, and she got out of it, and thank God we got turned around. But it happens to everybody, and it's a good point. Thank you for the call. Appreciate it. It's too bad that kids can get credit cards too easy because, you know, it's like when that's the time when you make all the major mistakes financially in your life is when you're that young.
Mary writes in on Facebook. She says, "Yeah, and I'll eat top ramen every night for 15 years."
Yeah, see, you can't do that because then you'll die of sodium and cholesterol problems. I don't know. I mean, yes, I know what he says, and for people, he's great at telling people how to create a budget and how to pay off their debts. But man, to live that frugal for 15 years, that's
in this society
to double your mortgage payment. That's crazy.
I believe when credit was not easy to obtain, like our grandparents' era. Then they had no choice but to pay cash. And I think that's why they probably were in better shape than our generations are, because they don't have credit at their disposal, and here the banks and the credit card companies just get super rich off of us because our needs to have what we want when we want it.
Right now, not 5 or 10 years down the road when we save for it. Hi, go ahead. What do you want to say?
The difference in 15-year and 30-year mortgages a lot of times are not as substantial as people think they are.
Give us an example.
My wife and I refinanced probably somewhere in the late 90s, and our payment went up $80 a month and cut the term. In other words, went from a 30-year to a 15-year for very little extra a month.
Yeah. That's not bad.
No, that's great. I mean, I'm hopefully you got a great interest rate on it as well. That sounds like a win-win right there. Go ahead. You're on the air.
Hey, I was just listening to your guys' conversation about the
But mortgages,
15-year loan. Yeah. When you do a 15-year loan, you're not doubling your payment. I did a 15-year loan, and of course I had a rather small mortgage compared to others, but it might be a couple $100 more a month.
When did you buy?
Many, many years ago, but I refinanced about halfway through my mortgage. And the deal is that for every extra dollar you pay towards your principal, that's $1 that you're not paying interest on for 30 years. And that's how that works. You don't pay twice as much to pay it off in 15 years. You pay a fraction of the entire mortgage.
Okay, yeah.
Thank you. Appreciate it.
But most people in today's housing climate, and the reason why we even talked to AJ Smith from smartasset.com, and the reason why they ranked San Luis Obispo County as the 10th ranked market for mortgage to income debt ratio, income to mortgage debt ratio, is because in this day and age, today in 2018, if you're going to go out and you're going to buy a house, everybody that's buying that house is stretched super, super thin. Now, I have no idea what the house buying climate was here in the 90s. I was not here in the 90s, but I've done a little bit of research. And I know houses that were selling in Los Osos in the 90s for $60,000, $70,000, they're now listing for $500,000. So these people that have these mortgage payments that were, $1,000, $1,200, $900.
Yeah.
You can't compare those mortgage payments to the mortgage payment of 2018
that are $4,000,
Yes,
$5,000
exactly
a month. Yeah.
Now, inflation does account for a little bit of that, but not what we've seen. That's why we're asking people this morning. Maybe these are people that are, because look at everybody that's called up and has a solution to the problem, and that would be the 15-year refi. Well, you guys all bought your houses a long time ago when your mortgage payment was doable, when it was commensurate to the wage that you make. This is a interesting area that we live in, and that's why it's ranked 10th in the nation for mortgage payment to income.
Yeah. I'm just looking at this house in Paso Robles.
10th worst in the nation, I might add. Not 10th best.
It's $565,000. The mortgage on it is $212,000. That's if you put the 20% down, which is going to be over $100,000. Yes. Otherwise, you have to pay mortgage insurance.
You got to have all that up front.
Yeah, but if you're going to pay that off, where's the 30-year at? If you were to move that to
and don't go with the rate that the calculator gives you, because it's going to be more than that right now, because those rates are going up as we speak.
Good morning.
Jeff and Jeremy in the morning on 93.3 KZOZ.